Hey, what is going on, guys? My name is Nick, and in this video I'm going to be sharing my thoughts on Palantir stock to figure out if it's trading cheaply or if it's a value trap. Despite being one of the most popular stocks among retail investors, Palantir stock has been getting crushed over the last few months amid the broader tech and growth stock sell-off. In fact, many investors have idolized Palantir as one of the next trillion-dollar companies or 10x investments, kind of like Tesla stock, which has a cult following. And this is because Palantir emerged as a unique leader in the software and data analytics industry, which is certainly in high demand right now. The company started as a US defense contractor using its software platform Gotham to, quote, enable its users to identify patterns hidden deep within datasets, while they also offer ongoing services to help the customers use it. This gave Palantir significant credibility, having been trusted by the US military to use and analyze their data, which allowed them to pivot their business model into the commercial sector. For example, Palantir's technology was able to help identify a $200 billion Russian money laundering scheme, and it also helped alleviate the A350 airplane production ramp crisis, among other examples across so many different industries. And Palantir's customers are saying that Foundry is to app developers this decade what AWS was to them last decade, and we all know how Amazon's AWS turned out to be. But to be honest, I don't fully understand how the software works, and I don't understand how exactly they provide value to the average customer, which is one of the main reasons why I didn't end up purchasing this stock. Moreover, I found this company incredibly overvalued when every other YouTuber seemed to be hyping up Palantir stock about a year ago, when its price to sales was at about 46. But now that the stock has fallen over 60% from all-time highs, I will admit it's becoming much more attractive now. So anyways, if you do enjoy the video, remember to drop a like to help support the channel, and if you haven't already, please consider subscribing down below so you don't miss any of my future uploads. Also, if you want your stock portfolio reviewed by yours truly, make sure to sign up for my Discord community of investors from the link below, where you'll also get access to my stock valuation models, weekly group coaching calls, and much more. But anyways, with that said, let's get straight into Palantir stock analysis. So Palantir stock reported their Q4 2021 earnings, and the stock crashed about 15% the next trading day, so let's get into them and figure out why. First, Palantir reported Q4 revenue of $433 million, up 34% year over year, versus analyst estimates of $418 million, while their full year 2021 revenue grew 41% to $1.54 billion. And although fast, revenue growth did slow down in the fourth quarter compared to the rest of 2021, which I do believe is a result of the reopening of the economy after the COVID shutdowns. But in their guidance, the company reiterated their revenue growth outlook to remain above 30% per year through 2025. So we'll see what happens, since they are only slightly above this target based on Q4 numbers. Next, Palantir's earnings came in at 2 cents per share, while analysts expected 4 cents per share, and this also shows the company is still barely profitable on a non-GAAP basis, while they're still unprofitable on a GAAP basis. As for guidance, the company guided their operating margins for Q1 2022 and full year 2022 to be 23% and 27% respectively, which would mark a decrease from 2021 levels, where they achieved an operating margin of 29% in Q4 and 31% for the full year 2021. So obviously Palantir only producing half of what analysts expected in terms of earnings, and then also offering somewhat poor guidance in terms of their margins. This did not bode well for the stock and is now trading at a 52-week low of $11 per share. However, I do believe there is a lot more positivity than investors seem to realize about this earnings report, and the one factor would be their gross margin being 80% in Q4. To give you some context, this beats out many of the top tech and software companies in the world, like Microsoft with a gross margin of 67% and Google with a gross margin of 56%. But Palantir's match right in line with Meta, which also has an 80% gross margin, and to be honest, I have not seen a company with a higher gross margin than this. So once Palantir is able to grow and scale their business even larger, they will probably be a very profitable business as long as they can keep their operating expenses in check. And Palantir is already hinting at some really big profitability coming in the future with some of their non-GAAP adjusted metrics, such as the adjusted operating income of $124 million, which is a margin of 29%, and then their adjusted free cash flow of $104 million, which is a margin of 24%. Now, I'm honestly really impressed with Palantir's margins, having seen them for the first time today, which really makes me consider Palantir as a potential investment. given the fact that they're almost on the verge of full profitability. However, there are a few things holding Palantir stock back right now, and those would be the stock-based compensation and the share dilution. Firstly, their stock-based compensation. In Q4 of 2021, the company issued $166.9 million of stock-based compensation, which represents almost 39% of their revenue. Guys, I'm not gonna lie, this is incredibly high as a percentage of revenue. And if we compare this to one of my biggest holdings, Trulieve, for example, Trulieve's $4.9 million of share-based compensation in Q3 2021 only represented 2% of revenue. So this is quite a big concern for Palantir stock right now because it does dilute shareholders quite aggressively, and that brings me to my second point, which is share dilution. We can see Palantir had 1.763 billion shares outstanding in Q4 of 2020, but then in the most recent quarter, they now have 2.012 billion shares outstanding. And this represents dilution of 14% year over year, which is a significant amount, that's for sure. And it also means that Palantir's 34% revenue growth year over year isn't totally accurate. It would actually only be about 17.5% revenue growth on a per share basis, which isn't amazing. But I do understand why they're doing this dilution. There's so much more incentive for an employee to stick around the company if they do get offered that share-based compensation, so this should hopefully lead to lower employee attrition rates for Palantir. And it should become less significant of an expense over time as the company's share price does grow and it becomes a lot larger. Now, given all of this information that we just went over, do I think that Palantir stock is a buy or a value trap right now? Well, looking at Palantir's valuation right after their Q4 earnings report, we can see that they trade for a price to sales ratio of only 14.4 after trading at 46 times sales only a year ago. So to start, this is much more attractive than last year, but let's take a closer look. We can compare this to Shopify stock, which is another stock that I've been buying recently and I'm very bullish on, which is trading for a price to sales ratio of 18 currently, while they just had revenue growth of 41% year over year in Q4. So I'd say that Palantir's valuation is about in line with Shopify's valuation when you account for the revenue growth rates. However, when we factor in the share dilution, Shopify comes out on top, hands down, so just check this out. In Q4 2021, Shopify barely diluted shareholders at all, being less than 1%, and for the full year 2021, Shopify diluted about 3% year over year. Therefore, Shopify's Q4 revenue growth per share was about 37% year over year, while Palantir's Q4 revenue growth per share was about 17.5% year over year, which is a huge difference now. So with Palantir's per share revenue growth being less than half of that of Shopify's, yet they're trading at very similar price to sales ratios, I think Shopify comes out on top. But we can also look at Tesla stock, which is another company with a tremendous amount of opportunity over the next decade. And right now it's trading at the same price to sales ratio as Palantir of about 18, but then they're expecting 50% plus revenue growth per year over a multi-year horizon, and Tesla just grew their revenue 65% year over year in Q4. But while Tesla stock might seem much cheaper based on the revenue growth rate factor, we have to consider the gross margin of 80% for Palantir and only 30% for Tesla stock, which will play a huge role on long-term profitability. So essentially what I'm saying is a company with higher margins can afford to have a higher price to sales ratio compared to a company with lower margins, because every dollar of revenue will produce more profits than that company with lower margins. And of course, this is where Palantir shines. So overall, I would say that although Palantir is still unprofitable and they do have a lot of share dilution based on their share-based compensation, these factors are hopefully temporary for Palantir. And because it's now trading in the realm of other similar growth stocks with similar growth rates, I would say that Palantir is a relatively attractive investment at these prices. Because if you look at the bigger picture, Palantir just has such a bright future opportunity ahead, and they seem to have a huge moat when it comes to data analytics. But I still wouldn't go as far to say that Palantir stock is cheap right now. I would just say that the risk-reward opportunity becomes a lot better at these prices. This also doesn't mean you should go out and buy Palantir stock right now. You need to do your own research and figure out how that software actually works and how they provide value for their customers, because it is quite complex to understand. Today was just a summary of my own thoughts based on one earnings report and about 2 hours worth of research, so yeah, just take it with a grain of salt. But anyways, I really hope you did enjoy the video. This was a fun one for me to make because I haven't looked into Palantir stock before and it's looking quite attractive, so I'll definitely be keeping my eye on it. But anyways, if you did enjoy the video, don't forget to drop a like to help support my channel, and if you have not already, make sure to subscribe down below so you don't miss any of my future uploads. And with that said, I will see you guys in the next one.